Hi, welcome back to Joe Blogs. In today's episode, I want to talk about what's going on with the export of Russian fossil fuels. Russia is an extremely large country from a geographical perspective, and it has a wealth of natural resources, including two of the most sought-after natural resources in the world, oil and natural gas. And over the course of the last 50 years, the Russian economy has grown to be dependent on the export of those products. And prior to Russia's invasion of Ukraine, the sale of fossil fuels accounted for the majority of revenue for the Russian economy. At the start of 2022, Russia's biggest single customer was the European Union. However, as a result of the invasion, the European Union and a lot of other countries from the West came out and stated that they no longer wanted to buy any Russian fossil fuels, and a variety of sanctions were imposed against Russia. So in today's video, I want to look at how effective those sanctions have been in terms of reducing the amount of revenue that Russia is earning, and look at exactly what's happened to Russia's exports of oil, gas and coal. And in addition to that, I also want to look at how effective the price caps have been in terms of limiting the amount of revenue that Russia is able to earn from the sales that it's making to countries such as India and China. And then finally today I'll wrap up with my summary as to what the impact of the sanctions on Russian fossil fuels are having on the Russian economy. This chart shows the total value in millions of euros of Russian fossil fuel exports dating back to the start of January 2022. The scale on the left-hand side of this chart is measured in millions of euros per day and goes from 0 at the bottom to 1.3 billion at the top. The bottom axis of this chart is a timeline from the 1st of January 2022 through to the end of June 2023, and there are three vertical dotted lines on this chart. The first is the 24th of February 2022, which was the day that Russia started its invasion of Ukraine. The second is the 5th of December 2022, which is when the European Union brought in an outright ban on the purchase of all Russian crude oil transported over the sea. And the third is the 5th of February 2023, when the European Union brought in its ban on all refined products such as gasoline and diesel. And if we look at the colour coding on this chart, which you can see is labelled on the right-hand side, the blue section at the bottom represents the daily value of coal sales. The purple section above it represents the value of crude oil sales. The beige or light brown section above that represents liquefied natural gas sales. There is a very thin, almost invisible blue line representing liquefied petroleum gas sales. The lilac section represents refined oil products, and the orange or light brown section at the top is pipeline gas. So we start off by looking at the situation in January 2022, which was before the war started. You can see that the revenue that Russia was earning was around 775 million euros per day from all of its fossil fuel exports. The biggest single source of revenue was crude oil sales, representing around 300 million euros a day, or around 40% of total revenue, followed closely by pipeline gas, which was generating around 275 million euros per day, or around 35% of total revenue. And the third biggest earner for Russia was the sale of refined oil products such as gasoline and diesel. If we now take a step back and look at what happened after Russia's invasion of Ukraine, you can see in the initial couple of months after the war started, Russia's revenues increased significantly, and in April 2022, total revenue peaked at around 1.2 billion euros per day. And the reason that we saw this large spike was that prices in the international markets were driven up by the uncertainty of the war. Now, before we go on any further today, I want to talk to you about today's sponsor, Atlas VPN, and to let you know about their amazing 3-year deal whereby you can get full coverage for only $1.83 per month, including an additional 3 months extra and a no-risk 30-day money-back guarantee. If you use the internet without any form of protection, you leave yourself exposed to tracking, hacking, and advertising. Using Atlas VPN protects you from all of these. Atlas VPN provides you with comprehensive security and is used by more than 6 million people worldwide. So it's fantastic news that it will protect you from hacking and tracking and data breaches. But what's also great news is that it can save you money and open up a whole new world of entertainment, because it allows you to change your location, which gives you the opportunity to get better deals and to access content that may not be available in your region. Atlas VPN is available to use on unlimited devices for one subscription, and Atlas VPN is currently offering an amazing 3-year deal whereby you can get full coverage for only $1.83 per month, including an additional 3 months extra and a no-risk 30-day money-back guarantee. So to purchase this exclusive Joe Blogs offer, please click in the description below. For a short period in April, Russia was actually earning more from the sale of pipeline gas than it was from crude oil, as a result of the fact that the price of pipeline gas in Europe rose so dramatically. And as we've discussed many times on the channel before, a lot of countries at that point were totally dependent on pipeline gas coming from Russia. Germany and Italy had built electricity power stations that were fed by this natural gas. And for a short period, the whole of Europe had no choice but to continue buying that gas at elevated prices, which resulted in a huge influx of cash for Russia. However, as you can see, after the peak in April 2022, there has been a consistent reduction in the total amount of revenue that Russia is earning from all of its fossil fuel sales, but particularly from pipeline gas. If you look at the section right at the top of this chart, it narrows down significantly, and where we are right now is Russia is earning a very small amount from its pipeline gas sales. And this is a major issue for Russia, because the easiest way to transport natural gas when it's extracted from the ground is to put it into a pipeline and feed it directly to all of your customers. But in order to be able to do that, you obviously need to build the pipeline. And over the course of the last 30 years, Russia has built a significant network of pipelines all across Europe. Unfortunately, from Russia's point of view, most of those customers have now come out and stated that they no longer want to buy any of that gas. And if you've been following the channel, you'll be perfectly aware that 2 of the biggest pipelines that Russia constructed, Nord Stream 1 and Nord Stream 2, which go under the Baltic Sea, were both hit by underwater explosions late in 2022, and those pipelines have been severely damaged and are no longer operational. So Russia has lost the vast majority of its European customers, and the biggest problem that it's facing is that it's not easy to be able to divert that gas to other markets. Because if it wants to sell gas to India and China, either it needs to construct new pipelines, which requires firstly a huge amount of investment, and secondly a large amount of time to actually complete these pipelines. So that really isn't a feasible solution for Russia, because it doesn't have a lot of cash right now and it doesn't have the time to be able to construct those pipelines. So the only alternative option would be to convert this gas into liquefied natural gas and transport it on ships. However, the problem from Russia's point of view is that it simply doesn't have the capacity to be able to process that amount of gas and convert it into LNG. So the situation as it sits right now is that Russia is sitting on one of the largest reserves of natural gas under the ground, but it doesn't have any way of monetizing that gas because it's lost its customers and it can't transport it to any new markets. If we now have a look at what's been happening with crude oil, you can see that during the first half of 2022, the revenue that Russia was earning from crude oil sales actually increased as a result of the elevated prices of crude oil in the international markets. However, since the middle of 2022, we have seen a continued decline in total revenues. And as it sits today, Russia is earning around 300 million euros per day from its crude oil sales, which is very similar to the position in January 2022. However, the price of oil has fallen significantly over that period. So what that means is that Russia is selling larger volumes of oil at a lower price to achieve the same amount of revenue. And therefore the profit that Russia is making is significantly lower. And if we look at the situation for refined oil products, so this is crude oil that's been passed through the Russian refineries and converted into end-use products such as gasoline, diesel and kerosene, you can see that in January 2022, Russia was earning around 150 million euros per day from the sale of those products. In the first 6 months of 2022, those revenues increased to more than 200 million euros per day as the price of refined products rose. However, since the middle of 2022, Russia's revenues have started to decline and are now coming in at around 100 million euros per day, which represents a significant fall compared to where Russia was prior to the war starting. But as with crude oil products, the bigger issue from Russia's perspective is that the price of refined oils in the international markets has fallen. So Russia is now having to sell larger volumes of its refined products for a lower total revenue, and that means that its profit margins have fallen significantly. So the overall summary of this chart is that prior to the war starting, Russia was earning around 775 million euros per day. Immediately following the war starting, that revenue rose to around 1.2 billion. However, today total revenue is down to around 450 million euros per day, representing a fall of around 325 million euros every single day, or around 42%. And that is one of the major reasons why the Russian economy is in such dire straits at the moment, and why Russia is continuing to record huge deficits. This chart shows the movement in the price of Russian crude oil, referred to as Urals crude, over the course of the last 12 months. And what this shows is that this time last year, a barrel of Russian crude oil was trading for around $81. However, over the course of the last 12 months, we've seen a significant fall in that value, and today a barrel of Russian crude oil is trading for less than $59. And if we look at the profile of this chart, you can see that between July and November 2022, the price of Russian crude was coming down, in line with what was happening in the international market for general oil prices. However, in December, we saw a sharp fall in Russian oil prices, and that was as a direct result of the European Union bringing in a ban on the purchase of all Russian oil transported over the sea. That significantly reduced the market for Russian oil, and as Europe is the closest market and therefore the most convenient and cost-effective from Russia, it had to reduce its prices in the international markets to encourage countries like India and China to take larger volumes. And as we just discussed when we were looking at Russia's total revenue, the problem from Russia's point of view is that as the price falls, it needs to sell larger volumes just to stay at the same total amount of revenue. And so Russia is reducing its profit margin on all of its oil. And ultimately, that's what's hurting the Russian economy, because it still may be shifting the same amount of oil, but if the total revenue and the profit is falling, that means that Russia has less cash to invest into the economy, to invest into things like the war in Ukraine, and that's why it's recording large deficits and why it's having to dip into its reserves. And this chart compares the price of Russian crude oil against Brent crude oil, which is the international benchmark for oil prices, over the course of the last 3 years. And the reason that I wanted to show this chart is to highlight the discount that's been applied to Russian crude oil after the war in Ukraine. If we look at the chart prior to 2022, you can see that there is virtually no difference in the price of Brent crude oil and Urals crude oil. The two lines are moving together. However, from February 2022 onwards, there is a distinct split. And the price of Russian crude oil over the course of the last 18 months has been trading at a discount of around $20 per barrel. And the reason that I wanted to highlight this is that that represents a fundamental change in the profitability of the Russian oil market. The cost of producing that oil is exactly the same as it always was. However, as the value has fallen, that means that Russia is now making significantly less profit. And when you've got a product such as oil, which has very high fixed costs, a movement in the sales price hits your bottom line directly. In order to limit the amount of revenue that Russia is able to earn from its fossil fuel sales, the West have introduced two price caps on Russian oil. The first was a price cap of $60 per barrel for Russian crude oil sales that was introduced on the 5th of December 2022. And the second was a price cap of $100 per barrel for refined product sales. So that's things like gasoline and diesel that have been through the refinery process. Now, not surprisingly, Russia has refused to accept these price caps. It's not signing up to the deal. So the way that the West is enforcing these caps is through insurance and shipping. Russia does not own enough oil tankers to be able to transport all of its own oil, so it uses the international markets. And the international shipping market is dominated by the West. And as a result of that, a large percentage of the ships that Russia is using are owned and controlled by countries that are applying sanctions against it. And this chart shows the daily value of Russian crude oil being transported by ships owned or insured by countries from the European Union, the G7 or Norway, dating back to January 2022. The scale on the left-hand side is the daily value measured in millions of euros. The axis across the bottom is the timeline running from January 22 to the end of June 2023. And as with the previous graphs, there are three vertical dotted lines. The first representing the 24th of February 2022 when Russia invaded Ukraine. The second, the 5th of December 2022, when the $60 price cap was applied to crude oil. And the third, the 5th of February 2023, when the $100 per barrel price cap was applied against refined products. So what this chart shows is that in January 2022, the daily value of Russian crude oil being transported by ships owned or insured by the West was around 200 million euros. Now, interestingly, following Russia's invasion of Ukraine, the value of that crude oil actually increased to above 300 million euros per day. And that was predominantly driven by the increase in the price of oil. So the volume of oil being transported was around about the same. It was just that we saw a huge spike in prices. And that spike in prices persisted through to the middle of 2022. And you can see that the daily value of the crude oil being transported varied between 200 and 250 million euros. And that value remained relatively constant all the way through to the 5th of December, when the price cap was introduced against Russian crude oil. And you can see that immediately after the price cap was introduced, the value fell to around 75 million euros, as Russia didn't want to use ships from the West because it was trying to avoid the price cap. The way that the price cap is being enforced by the West is that all of their ships refuse to take any Russian oil that's been sold above $60 per barrel. It won't be insured. Russia was trying to circumnavigate by not using ships from the West. However, the problem that Russia found was that the market is entirely dominated by these countries. And as you can see from the graph, within a month or so, the value of the oil being transported rose back to around 150 million euros per day. And the daily value of Russian crude oil being transported at the end of June was around 125 million euros per day, which represents around 42% of the 300 million euros per day that Russia is earning from crude oil sales. So what that means in reality for Russia is that 40% of all of its sales are absolutely locked into that price cap. There is no way that they can sell any of that oil above $60 because they won't be able to transport it and deliver it to the customers. So you may be thinking that if 42% of the oil is being transported by ships owned by the West, that means that 58% is being transported by non-sanctioning countries, and therefore that gives Russia the opportunity to make more sales above $60 per barrel. And if we jump back to the chart that shows the price of Russian oil over the last 12 months, you can see that in 2023 there have been some occasions when the average price of Russian oil has risen above $60 per barrel, because Russia has been able to agree deals above $60 per barrel where the transport isn't using any of the sanctioning nations. However, on average, if you look at the situation for the whole of 2023, the price of Russian oil has been below $60 per barrel. And this chart shows the daily value of Russian refined oil products being transported by ships owned by the West, dating back to January 2022. So you can see that before Russia invaded Ukraine, the daily value was running at around about 150 million euros per day. As with the crude oil chart, there was a spike following the start of the war as a result of oil prices rising dramatically. However, between February 2022 and February 2023, there was a gradual reduction in the daily value, which was broadly in line with the fall in oil prices over that period. And by the 5th of February 2023, which was the day that the refined oil price cap was introduced, the total daily value of oil being transported was around 125 million euros. Now, what happened immediately after the price cap being introduced was exactly the same as what happened with crude oil products. Russia was trying to avoid using ships from the West, and so there was a drop in the daily value. However, Russia then realised that there weren't enough ships available to be able to stop using those carriers, so we saw a rise again. However, between March and the end of June, there has been a significant fall in the value of Russian refined products being transported by these ships, and the daily value at the end of June was around 75 million euros. However, the big difference between refined products and crude oil is that Russia's two largest customers, India and China, are not interested in buying refined products. Both countries have their own refinery systems, and they would rather buy crude oil in and put it through their own refineries rather than paying a premium to Russia. Now, prior to Russia's invasion of Ukraine, the biggest single market that Russia was selling refined products into was Europe, and it's struggling to find replacements. And the key difference that we've got here compared with crude oil is that the daily value of refined products being transported by ships from the West matches the decline in total sales by Russia, and the percentage of refined oil products being transported by these ships is 75%. So that means that 75% of all of Russia's refined oil exports are subject to the cap because those vessels won't transport those refined products unless they've been sold for less than $100 per barrel. And this is now proving to be a major problem for Russia because refined products are a much higher margin. They are far more valuable to the Russian economy than crude oil sales. This chart shows the top 5 importers of Russian fossil fuels during the week ending 25th of June 2023. The scale on the left-hand side of this chart is measured in millions of euros, and across the bottom we've got 5 different countries. In terms of the colour coding, the black section represents pipeline gas sales, the green section refined oil products, the dark green section liquefied natural gas, the light blue section crude oil transported over the sea, the medium blue section crude oil transported by pipelines, and the dark blue section coal. And what this chart shows is that Russia's largest trading partner is now India, who purchased around 900 million euros of Russian fossil fuels during that week. And the vast majority of those purchases were crude oil transported by ship. That represented around 800 million euros. However, India also purchased around 75 million euros worth of coal and around 50 million euros of refined oil products. China was Russia's second largest trading partner, purchasing around 800 million euros of Russian fossil fuels. The largest single purchase was crude oil transported by ships, which represented around 350 million euros, followed by pipeline purchases, which represented around 250 million euros, coal, which represented around 100 million euros, pipeline gas, and then a very, very small amount of refined products. Russia's third largest customer for fossil fuel exports was Turkey, which purchased around 450 million euros worth of goods. And interestingly, the largest single purchase was refined oil products. And as we've discussed previously on the channel, India and China predominantly are not interested in buying refined products from Russia because they have their own refinery networks, and they would rather buy crude oil and pass it through their own system and therefore keep some profit for themselves rather than buying the more expensive and higher margin refined products. However, as you'll also be aware if you follow the channel, Turkey is in dire straits at the moment in terms of its foreign currency reserves, and so it needs to find friendly trading partners. And as Russia has lost its main markets for refined oil products, which were being sold into Europe, it's now turned to Turkey and is supplying large quantities. And one of the big questions here is whether or not Russia is actually being paid in cash for those sales, or if Turkey is just building up more debt. And I think that second scenario is highly likely. And as you can see, Turkey is also buying seaborne crude oil from Russia, as well as pipeline gas and coal. Now, interestingly, Russia's fourth largest trading partner is the European Union, which purchased around 175 million euros worth of fossil fuels. And this really is the legacy of the relationship. Some of the countries in the European Union have been given a dispensation because they're struggling to be able to find alternative supplies. And as you can see from the breakdown, the largest single purchase is crude oil that's being provided by pipelines. And these sales relate to some of the landlocked countries in Europe that don't have coastlines, so they're finding it difficult to replace oil that's being provided directly from Russia via the pipelines with oil that's being transported overseas from other countries because they simply don't have the coastline or the infrastructure to be able to take those deliveries. And the other two categories of products that European countries are continuing to buy from Russia are liquefied natural gas, as there's no actual outright ban in place at the moment, and refined oil products for exactly the same reason as crude oil. Some of the countries are struggling to be able to find alternative supplies. And Russia's fifth largest trading partner for fossil fuels is South Korea, and the biggest single purchase that South Korea is making is coal. So what's the summary and conclusion today? Well, I wanted to post this video because oil and gas is the lifeblood of the Russian economy. The export of these fossil fuels is what the Russian economy has been built upon. This is how Russia has created its wealth. And since Russia's invasion of Ukraine, the West has been targeting all of these products to try to reduce the amount of revenue that Russia's earning, to hurt the economy, to try to persuade President Putin to stop the war. And what we've seen from the data that we've been through in today's video is that the sanctions are working. Initially following Russia's invasion of Ukraine, there was a spike in oil prices, and this provided a bonus because it meant that even though it may be selling less volume of oil, the value to the Russian economy was going up because prices were going through the roof. However, over the course of the last 12 months, Russia have been hit by a variety of factors, all of which have been negative. Firstly, the global market price of oil has been falling as a result of concerns about the global economy. There is a slowdown going on. China is not hitting the level of growth that everybody expected, and we may now see a recession at some point over the course of the next 6 to 12 months. So as those global prices have fallen, that's obviously impacted on Russia's revenues. But on top of the general fall in prices, as we've seen from today's video, Russia is still having to sell its oil at a discount to encourage nations to take large volumes from it. And alongside the voluntary discounts that Russia is offering, the price caps that were introduced in December and February are also hurting Russia's revenues because Russia doesn't have enough ships to be able to organise its own delivery of its oil products and is therefore having to use ships from countries that have applied those price caps against it. So what we've seen from today's video is that prior to Russia's invasion of Ukraine, Russia was earning around 775 million euros per day, which is the equivalent of around $850 million, which on an annualized basis gives Russia revenue of around $310 billion per year. However, the combination of the sanctions and the fall in oil prices means that Russia is now earning around 450 million euros per day, or around $500 million. So that means that Russia has lost revenue of 350 million euros per day, which on an annualized basis is around 130 billion euros, or around $140 billion. And that loss of revenue explains why Russia posted a deficit of over $40 billion for 2022 and another $40 billion in the first quarter of 2023. Russia is hemorrhaging cash right now. And the reason for that is that a lot of the infrastructure that Russia has put in place has high fixed costs. So when you see a reduction in your revenue, it immediately hits the bottom line because you still have to pay all of those costs. But if you're receiving in less money, it means that you have less cash to be able to do things in your economy. And that's the situation that Russia finds itself in right now. And one of the other problems from Russia's point of view is that the price of a barrel of Russian oil has fallen from around $80 per barrel back in January 22 to around $60 today. So that means that Russia is now having to sell higher volumes for lower revenue. So this is a double whammy from their point of view. Russia is having to incur the costs of higher production at a time when its income is falling. So the overall summary of today's video is that compared with the start of 2022, Russia has seen a fall in its total revenues of around 42%, which shows that the sanctions are working and explains why the Russian economy is in such dire straits at the moment. And if we see a continuation of the fall in oil prices generally across the globe, Russia over the course of the next 6 to 12 months could run out of cash. So hopefully you found today's video useful, informative and thought-provoking. If you've liked what I said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.